Welcome to Zacks Live, Zacks earnings show that's live every week before the market opens. I'm Tracey Ryniec, and I'm here with David Bartosiak this week and Todd Bunton. And we're going to discuss some interesting things, Dave. Like, there's a lot going on, but first we have to talk about what happened last week because Alibaba reported. It was their first report. They did miss, but that's not unusual. A lot of companies miss the first time out because the analysts don't know what they're doing. But, you know, shares got a big boost over it. Revenue up over 50%. What do you make of it?
Right.
What do you make of the shares soaring here?
Pretty exciting numbers. And I know there was a lot of buzz around the IPO. We did that live show here on that, and everybody was pretty excited about it. And yeah, you know, usually that first earnings report from an IPO, the analysts don't really know what to expect. They don't, you know, they're kind of they're pulling numbers, not pulling numbers out of a hat, but there's no experience. There's nothing to draw off, so they don't really know what they're looking for. So they don't mean as much as far as if they're beating or are they not beating. But when you see growth numbers like that, that's obviously very encouraging. And I think you saw in the stock price that you know, investors were definitely applauding what they saw. You know, that first day in the IPO when we were at, you know, $90 and everybody was going crazy, you know, some people questioned valuation, but now when you look at the growth numbers, it almost seems like that's going to be justified. And now the stocks ran up. We're at, I think in pre-market today it was $116 a share.
Yeah.
So it just kind of keeps on trucking.
So would you be a buyer at this point? Seems a little pricey and a little bit. Well, it is a momentum stock.
It is expensive, but it's on the move right now. And, you know, it's all about your time frame. Are you going to hold this thing for a few weeks? Are you going to hold it for a quarter? Or are you going to, you know, put it away and 10 years later take a look at it? So I think, you know, obviously the longer term you're holding it, the easier it is to justify buying it here. But yeah, it's definitely a stock on the move right now. So if you want to roll the dice a little bit, go ahead. Okay,
one other thing we have to talk about, because this did come up when we were doing the IPO show, is tomorrow, 11/11. It's the day, the holiday I want to adopt here in the United States. It's Singles Day in China. And it's huge. It's like their Black Friday or their Cyber Monday, but even bigger. Last year, over $5 billion worth of sales. I saw estimates about $8 billion. It's a holiday that they adopted. It was started in the early 1990s, but they started offering discounts a couple years ago, and you can get 50% off a lot of items. So it's encouraged singletons and everyone else to buy because you're getting all these deals. They're rolling it out to some of their international sites this year. What do you make of Singles Day?
I think it's a great idea. We were talking about it before. It's like you know, the Hallmark holiday, but now it's the Alibaba holiday. Right? You know, nobody really heard about it. You know, it kind of went under the radar.
It's true.
And then in 2009, right, was when Alibaba started really pushing it on their site. And now they've created this monstrous day kind of out of nowhere, which is, it's amazing just that culturally they could do something like that. You know, just one company can decide, yeah, we're going to spend a bunch of money on this day, come on over.
Right.
So, yeah, $5.8 billion last year, and they're talking $8 billion this year. I mean, that's a lot of money. It's more than like the biggest internet sales week in the U.S., like all 7 days combined that they do just in one day. So it's tremendous how much volume they do.
It's not getting a lot of traction here in the United States yet, but
we just started hearing about it, right? So, and then we've got that, you know, we have Veterans Day. So I mean, that's going to be, you know, there's a little bit of carryover, and a conflict there.
Some people are off work though; they're already at home. Of their computers.
So go ahead and shop.
I don't know.
I don't know. Maybe we can tweak it a little bit. We can make it a different day.
Also interesting, it's not the first kind of holiday that has been like kind of pushed by a retailer, because I didn't realize this, but Rudolph the Red-Nosed Reindeer is actually started by Montgomery Ward's back in the day. They created Rudolph, and now look at it.
Look at it.
So Singles Day, it's coming soon.
We need to come up with our own Zacks holiday. Everybody goes and just, you know, gets their finances together.
Some way.
Buy some stock.
All right, let's talk about what else happened last week. Todd is here with more details on what went on.
Thanks, Tracy. Yeah, just kind of a bigger overview here on Q3 earnings season. We have results in from 89% of the S&P 500. So earnings season is starting to wind down. We have a very clear picture. And I'd say overall this earnings season has been good. You can take a look at the numbers here in terms of percentage of positive earnings surprises. It's been one of the best in several quarters, almost 72%. 4-quarter average is 67%. So usually about 2/3 of companies are beating on the bottom line. You're seeing more than that now. The median beat is healthy at over 3%. And then the earnings growth, the bottom line growth, has been almost 7%. So that's That's a very solid, high single-digit growth there. On the revenue side, not quite as strong. We're looking at 58% of revenue beats. That is still above the 4-quarter average slightly. Revenue growth of 4% is pretty solid too. So really nothing to complain about this earnings season. I'd say the one blemish though is looking ahead to next quarter, and you can see estimate revisions have been coming down steadily over the last really several months. Back in late September, analysts were looking for about 10% earnings growth for Q4. Right now, they're looking at just 4% growth. But this negative trend in estimate revisions is nothing new. We've seen it for several quarters now. So it's not an alarming statistic, but we would like to see this trend of negative earnings revisions eventually flatline, right, and start to become positive, especially as the U.S. economy picks up and things look better there. But overall, I'd give this earnings season a solid B, if not a B plus on at least the metrics here in terms of estimate revisions. Not as bright, but overall, good earnings season is what we're seeing.
Okay, I like that kind of positive attitude, because I've heard kind of doom and gloom, but maybe it is because of these estimates coming down for future quarters that people are kind of worried about. But this quarter, it seems pretty good to me. But we're not done yet. We still have a few more S&P companies are still reporting, but we're getting a lot of the small and mid caps now, and we're going to get the retailers. So everybody kind of is like, we're done with earnings, but there's still a lot of companies still to go. And what do we have this week? We're going to get some retailers this week.
Yeah, we're going to get several retailers this week, and we're going to go over a few of them here.
Okay.
But a couple of them that we're not going to talk about, like Kohl's is going to report.
Okay.
Dillard's, those few of those type companies. But here we have Walmart. Right, that's definitely a big one.
One of the bellwethers, and they've stopped reporting monthly sales numbers, so we don't really know what they're going to do going into it.
They want to keep us on our toes, I guess, a little bit.
Yeah, but they did lower their forecasts not that long ago, however.
Yeah, they're going to report Thursday after the bell,
okay.
Or Thursday before the bell. I'm sorry, and they've missed.
But look at that chart.
Yeah, they've missed 3 of their last 6 quarters. So it's. I don't know. It's kind of iffy. It's kind of up in the air what we see from Walmart. Yeah. But of the people that I've talked to, I don't hear anybody that's like, I can't wait to hear what Walmart's going to do.
Right. I know. Well, maybe that's reflected in that chart. That chart's not helping the Dow here. The Dow's at record highs, and Walmart's basically been stagnant for a year or two.
Right. They're dragging a little bit, and
right.
And part of the reason is they're not beating earnings. They're not doing what they set out to do. So.
Okay. What else we got? We got. Cisco, aren't they this week? They're another big wig.
Yeah, Cisco's going to be this week.
But look at that chart. No misses.
We're going back, 5 years on this?
Yeah.
And they've beat every single time, so that's 20 quarters in a row. I couldn't even find, the data going further back than that. If it's more than 20, how long this streak has been going.
But isn't this just good earnings management? John Chambers, he knows how to get the number. It's
I think
good.
so, because it's not like they're knocking the cover off the ball and they're destroying earnings. They're beating by a penny here,
right.
2 pennies there, but still, I mean, they're still
consistent.
beating. Still getting it done. So yeah, you can definitely tip your cap to John Chambers on this one.
Okay, and then we're going to get a retailer that's been struggling. Todd, you follow some of these retailers. What about JCPenney? It seems to have turned the corner here, at least on earnings beats.
Yeah, as you can see in the chart here, they've after a string of just god-awful misses, right? I mean, it was just a disaster for them. They have had 4 consecutive positive earnings surprises, but one metric that we have here at Zacks is the earnings ESP, earnings surprise predictor. And looking ahead to this quarter, based on that metric, it looks like JCPenney is setting up for a miss. So maybe they, that string of 4 gets broken. Basically what the earnings ESP is real quick is it takes the most recent consensus of analyst estimates, traditionally the 30-day consensus, and compares it to the overall Zacks consensus estimate. And the reason why you'd want to consider the earnings ESP is because analyst revisions right ahead of a quarter usually reflects fresher information. If a company, for example, reports monthly sales figures, or if the analyst can do channel checks and talk to suppliers and see how the company's doing, or talk to management if they have any kind of fresh information to revise their estimates ahead of that number, that's usually a good predictor of what the company's going to do, that 30-day consensus. Right now that is a little weak for JCPenney, so it's something to look out for. I don't know if this is one I would play right before the earnings. I'd like to see the report and see if this turnaround is really in process.
Do we know what the ESP was for Walmart at all? Does that look good?
That was also slightly negative. I think it was just a penny below the overall Zacks consensus estimate, but still not looking good. Cisco is another one I looked at. That came in right in line, so the 30-day consensus matches the full consensus. Of course, they'll probably come out a penny or two ahead of that as they like to do.
Okay. Wow, that's interesting. I know with JCPenney, to watch inventories, obviously same-store sales, these are all things they've been struggling with, so I'm going to be tuning into that. But we have a couple kind of more hot glamour stocks also reporting this week. We had one this morning, 3D Systems reported already, and it looks like they missed the Zacks consensus. They might have beat other street consensus, but we have issues with stock options and things like that.
Right, and that's that was the 3D printer.
Yes.
Which was really hot about a year ago.
Yeah.
And then since then things have kind of cooled down because we realized that hey, we're not all going to have our own personal 3D printer that we're making stuff with, right?
So I shouldn't be trying to get into that space.
It's like these little pockets of the market heat up for a little bit. And then just as fast as they heat up, they cool off, and people forget about it. And then you're there, wishing and waiting that okay, now it's going to turn back around. Now it's going to turn back around. And sometimes it never does.
Right.
When you think of like the dry ships of the world.
Yeah.
Right. Remember how hot those were?
Oh yeah.
And then all of a sudden, nothing, and it's just kind of been
it's been awful.
bumping along the bottom.
So what's the hot
years.
area right now? Do you think that I should be getting in?
Right now, I think we're still, we're still looking at these huge new kind of sweeping internet-based ideas that are coming out. So you still get some cloud names that get hot every once in a while.
Okay.
There's a few areas in biotech that have really been starting to turn things on again. The hot areas are decent, but it's like there's cold areas that you definitely want to avoid altogether.
Okay.
And it's more kind of like of staying safe and avoiding the coldness of. The oil stocks.
Really,
oil
I was just going to ask you about
exploration.
energy. So you're not intrigued at all by that?
There's so much risk right there in that space because whether you're an explorer or producer or whatever, you're not sure where you are now. How much money are you going to be able to make with oil at $79 or $80 a barrel? It's starting to get to that point where it's kind of like break even for some of these companies. So, can they stomach, a $3, $5 shock to the downside, or is it really gonna affect their bottom line? You're just not really sure. When oil's up at 100 and it's going between 190, 190, then nobody cares.
Yeah.
But when you start to get closer to that break even point for some of these companies, then there's a lot of stress involved. So
yeah.
I'd avoid that.
Okay, you're also seeing earnings estimates come down because inevitably the analysts, for the E&Ps at least, have to cut estimates as the oil price comes down. So
right.
Bad Zacks rank.
Yeah.
That going on there.
Yeah.
Now, you just were mentioning some of the hotter areas and internet, cloud. We have YY reporting this week. This is another Chinese company.
Right,
Seems
because.
Well, right. I mean, I don't know where they come up with these names.
Yeah, I don't. This is. We were talking about Alibaba, obviously being the huge retailer in China. So YY is kind of like a social platform kind of thing. I'm not gonna call it the Facebook of China.
Okay.
I'm not gonna draw that parallel. But it is kind of one of those sort of social sites like Facebook, I guess, but they're not as dominant as as a Facebook is here in the U.S. But it's definitely a company to watch. It's been on the move, and when things start heating up in China, as investors are more comfortable with investing in these Chinese internet stocks,
right.
which we make fun of all the time because they kind of seem to come out of nowhere.
Yeah.
But it seems like with Alibaba, there's been a little bit more credibility to some of these names. So with YY, we were talking about Alibaba and with the IPO, the post-IPO earnings report.
Right. Same thing here.
They had a huge miss following their IPO. But then 3 of the last 4 quarters they've beat.
Right.
So it seems like now everybody's kind of on the same page, and we're starting to move forward here. So this is going to be a report that I'm pretty interested in. This is going to be tomorrow. We're going to see this one, and look at the price and consensus chart. I mean, since the IPO, this thing's been on fire.
Yep.
But there's certainly been some volatility, and the last time when we came in and that one of the 4 quarters where it actually just came in, at expectations,
nobody
we had a
liked that.
huge sell-off.
Yeah.
Yeah. So definitely a roll of the dice on this one.
Okay.
But if they beat, it could be great, and if they miss, then watch out, get out of the way.
Todd, is there anything else you're watching for this week's on earnings, just in general?
like you mentioned, the retailers, that's kind of the last big sector of the S&P 500 to report. So a lot of names coming out there. We already covered a lot of them. But some stocks I did want to talk about were ones that beat last week and are seeing a huge increase in estimates. So I brought with me here a list of 6 names. Now, these companies all delivered positive earnings surprises last week, which is great. But more importantly, they're seeing a huge increase in consensus estimates from analysts and also a huge rise in price. So the market loves it. Analysts love it. And these are your Zacks number 1 and Zacks number 2 ranked stocks. So if you're looking for some names to add post earnings, you don't want to play the names before they report. Just play it a little safer. Then these are just some names to check out. And a lot of the names on these lists have been kind of beaten up and kind of ugly stocks. But at the same time, these are the companies, these are the kinds of stocks that one good quarter and a change in sentiment, you can see a huge increase in the price. Office Depot being a name there, Earthlink. I mean, we haven't talked about that since the 90s, I don't think. But yeah, huge increase in estimates, huge increases in price. So these are some names to focus on if you're looking maybe for some momentum trades over the next few weeks, few months to play that post earnings announcement drift. But on the flip side, I have 6 companies that delivered negative earnings surprises and have seen a significant drop in consensus estimates and have seen their stock price drop as well. Sprint probably being the biggest stock on here. Chuy's Holdings, the restaurant stock, Leapfrog, some smaller caps on this name. So these are names I'd want to avoid at least until the earnings momentum starts to improve. These are your Zacks 5 ranks, which are strong sells because of the negative earnings estimate revisions. So just some names if you want to play, like I said, the post-earnings announcement drift, or to avoid. And if you hold these stocks, I wouldn't be expecting any kind of turnaround anytime soon. So that's something to look out for.
I saw Plow on there, and I hate to say it, but I have to mention the Polar Vortex that's coming towards 2/3 of the country again.
Right.
And Plow makes like the attachments that go on trucks and everything to plow the snow. They did have a good quarter because everyone was ordering everything ahead of time this year. So people were nervous maybe in the last quarter that the winter could be bad. Is Plow a way to play the Polar Vortex?
I think so. There's going to be snow, and then you're going to need snow removal equipment, right? So, and they just had a record quarter that they reported, and typically fourth quarter is the best for them.
Right.
So we've still got the best ahead of us with Plow. So I think that's definitely a good idea here with Polar Vortices on the way.
I can't believe I have to say those words. I also want to mention Land's End. I think it's a Zacks number 1. It's makes all the coats and all that. I would think with this big cold front coming down that companies like that, the retailers that are selling the coats and everything,
and wool socks.
Yeah,
right?
and just all the winter wear. It's a little early this season to get this kind of cold, so that Land's End is one to watch. This quarter and next quarter to see if they're going to benefit from this kind of cold. Okay, I guess that covers just about everything that's going on this week. We will return next week with an update about Cisco and some of the others. And join us again next week and send your questions in at Zacks or live at Zacks.com. Send us your questions and we'll try to answer them on next week's show. This is Tracey Ryniec, and that's it for this week. Thanks.